Welcome back to Next Gen Investing. It's time for Under 30. Joining us now, George Tsilis, Senior Markets Correspondent for the Schwab Network. George, earnings, and more earnings. We got Intel on the calendar as well. It's going to probably be overlooked a little bit with some of the other names like Apple hanging out there. But maybe this is the moment that this company needs to get something positive into the universe.
Something positive. I think maybe they're getting close on positivity for the business. I looked at the 10-year chart on this one. I had to go all the way back that far. We're sitting basically at 2016 levels for Intel. So for what it's worth, the stock has been down considerably over the last 10 years. Obviously, they've got some challenges, being, of course, primarily a CPU producer. There's also questions about the foundry business. There's also the investments in Mobileye, which they still own quite a large stake of. And, of course, the write-downs that the company's actually faced. Just to give you some context, essentially last year the company had about $54 billion in sales. They actually took a charge-off, a write-down of about $9 billion. In total, it was $16 billion. That they had in losses last year. The stock is reflecting that, but I think if you look at the last year, at the very least now, the last 2 quarters, it seems to be now in a trading range. So with that said, this potentially could be the final kitchen sink quarter for Intel. The other thing is they're looking for a permanent CEO. That's something to be mindful of that I'm sure analysts will be looking at. But the estimates for earnings are expected to be 12 cents a share. That's down about 77% compared to 54 cents that the company earned last year. And sales are expected to be down about 10% at around $13.8 billion versus last year's print in sales for the same quarter at $15.41 billion. So, this is obviously a great franchise, a great business. They still have a majority market share in the CPU space. I think they're lacking in 2 areas. One, they still can't compete with the behemoths in the foundry or manufacturing business, which is mainstay competitor is Taiwan Semiconductor. And 2, the GPU presence really hasn't been there for Intel. And then the last thing I'll point out that Intel and both AMD as well in the CPU space has faced considerable competition in China. Now they're trying to divest of their exposure in China. Both companies are. But nonetheless, that has been a problem area for the CPU manufacturers, both Intel and AMD.
So, okay, that's what I was just going to ask is where they really carve out their niche in terms of the growth, because I have to hope that they've come up with a growth plan, a strategy here to reignite some of those frustrated investors. But so far from earnings we've heard, it's been a relatively positive picture. Taiwan Semi was positive. So far, Lam Research, ASML positive. I know different companies, but do we expect Intel to fall more in the same camp as like a Taiwan Semi, or is it just somewhat its own beast at this point?
Well, there's idiosyncratic issues with Intel. I think the innovation competitive factor is a problem for Intel. I think the China exposure problem is a factor for Intel. And obviously, CPUs are sequential computing versus GPUs, NVIDIAs are parallel computing types of chips. Obviously, parallel computing allows for more data crunching across, 3D accelerator types of needs that AI has. But at the same time, we've all been talking about this refresh cycle in the CPU space. And I think it's manifesting. If you look at Lam Research, they actually guided higher. They're a primarily provider of DRAM and NAND flash memory equipment. Micron also in that space. All these companies have been weak in the last year. But Intel's got its own problems with its foundry business. But I will say this, they have about $20 billion in cash, $24 billion in cash on the books, $50 billion in debt, $85 billion in market cap. And going forward, I'll say this, that the estimates for 2026 earnings are positive $1.67 versus the negative 14 cents for this fiscal year. So for what it's worth, the stock is now trading around 12 times 2026 earnings. So it looks like, based upon those numbers, an inflection point potentially is manifesting in this name.
Yeah, and I think that's a good point. We'll have to see how they do when they report, because a lot of eyes on Intel, of course, up about 1% today. Appreciate it, George.